Schatz is president of Heritage Capital. Good to have you here.
Thanks.
We've been calling for a correction, at least the analysts we've had on Fox Business. I can think all the way back to last winter. I mean, in November and December of last year, and we haven't seen it yet. So why do you think now? Why is this any different?
I think you have to separate correction from routine pullback. Routine pullbacks are 4 to 7%. They occur at any time for any reason, and they're healthy in a bull market. So we're certainly overdue for a routine and normal pullback like we saw in June. I think before we get to that 10 to 20% decline, we've got to see some more of the internals of the market deteriorate, and I don't think we're there just yet.
So what signs should I be looking for? And you're talking about, you're saying we will see a 10 to 20% decline. Give me a time frame for that. I know people don't like to time the market, but I'm going to put you on the spot.
Sure. To me, it's one of two scenarios. I think either we're going to, just like 87, we'll see a high put in July or August. In August, it was in 1987. And we'll have a more significant decline September, October. If we don't get it then, I think we're set for another new high above 16,000, maybe 16.5, and then you'll see that correction early in the first quarter. I think it's one of two scenarios, but I think it's coming because the seeds are just starting to be sown for that correction.
So again, I want to get to what are the flags, the red flags we should be looking for, because 1987, we shot up almost 40% in the first 6 months, and then we crashed 40, but at the end of the day, at the end of that year, the market still closed up.
That's right. I've always thought this year was going to be a front-loaded year, meaning you make all your easy gains the first half of the year. The second half of the year is going to be much more difficult. I think no matter what scenario we're talking about, we're going to have a decline between August 1st and October 1st. To me, that's a certainty. Only the depth of the decline is I guess, is an open item.
Okay, so what are the red flags? I mean, some people like to look at PE. What is it for you?
No, I don't think it's the PE. The market is the market fairly valued. Sure, I'll give you it's fairly valued. I think number one, you've got high-yield bonds have not gone back to all-time highs. That's the first canary in the coal mine, the first canary dying that some liquidity is being sucked out. I think the next thing to look at is the New York Stock Exchange advanced decline line. Number of stocks going up or down on any given day, a cumulative line. When that doesn't make a new high with the market, that's a red flag. When the Dow transports don't make a high, when the industrials do, that's another red flag. And of course, sentiment. When you've got too many folks really excited and enthusiastic about the market, that's probably the biggest red flag.
Yeah, that's usually the sign of a bubble when people are that enthusiastic. Very quickly, if I am in agreement with you that this August 1st to the next couple of months we'll see the pullback, what do I do as a small investor, not as someone who has someone like you managing my money, but what do I do individually?
So listen, the small investor has made a significant amount of money in 12 and 13. Now is the time to prune the portfolio. If you're doing it yourself, you're pruning the portfolio.
Where do you put it, though? You don't want to put it in bonds, do you? I mean, come on.
Well, I would say this. If you're talking about a risk-reward basis, if we're going to correct, stocks are going to go down a lot more than bonds are going to go down if the scenario lays out. So, and listen, you can look at floating rate bonds. Floating rate bonds may give you a little cushion that, say, treasuries wouldn't give you, or certainly high yield wouldn't give you. I think you can dial back your risk with some staples, maybe even some utilities at that point.
All right, Paul Schatz, we appreciate your being here, and I know a lot of investors are listening to what you have to say right now. Thank you very much.
And to the breaking news that you so eloquently said is grabbing Wall Street today. Still waiting for the New York Attorney's Office news conference on its charges against SAC Capital. So let's bring in Charlie Gasper. You've been covering this story for basically years at this